Welcome back to the channel, and thanks for joining us here at AlgoBot, where we break down automated trading strategies for MetaTrader 5 in plain, everyday language. Today we're taking a close look at an expert advisor called Directional Movement Pullback. It's a trend-following system that blends three classic tools: the Directional Movement Index with its ADX reading, an exponential moving average, and the Relative Strength Index, to time entries when a trend pauses and then resumes. By the end of this video, you'll understand exactly how it reads the market, how it manages risk, and the thinking behind every rule. Let's dive in. So what exactly does the Directional Movement Pullback Expert Advisor do? At its heart, this is a trend-following, pullback continuation strategy. Rather than trying to catch tops and bottoms, it waits for a market that is already trending strongly, then looks to join that trend after a brief pause, a pullback. Once momentum begins pointing back in the trend's direction. The strategy is built for the currency markets and can be applied to any single symbol and time frame you attach it to, though traders often study it on the major foreign exchange pairs using charts like the 1-hour or 4-hour. It reads only the time frame of the chart it runs on, and it acts only when a bar has fully closed. That single design choice helps it avoid the repainting problems that come from reacting to a candle that is still forming. Three indicators work together here. The first is Wilder's Directional Movement Index, which produces the plus DI and minus DI lines along with the ADX. ADX measures how strong a trend is, while the plus and minus DI lines tell you which side, buyers or sellers, is currently in control. The second is an exponential moving average, acting as a simple trend baseline. The third is the Relative Strength Index, used here not for its usual overbought and oversold extremes, but for a cross of its 50 midline, which marks momentum shifting back in favor of the trend. Who might find a system like this interesting from an educational standpoint? Traders who prefer structured, rules-based decision-making, and who like the idea of trading with the prevailing trend rather than against it. Everything is governed by fixed, transparent parameters, so there is no guesswork about why a position opened or closed. Remember, though, that trading always carries risk, that losses are a normal part of the process, and that nothing here is a promise of any particular result. This is educational information only, and not financial advice. Let's walk through the exact logic, step by step, starting with the filters that must line up before the strategy will even consider a trade. The first gate is the strong trend check. The strategy reads the ADX value and compares it to a threshold, which defaults to 22. If ADX is above that level, the market is considered to be trending with enough conviction to act. If ADX is below it, the strategy simply stands aside and waits. Next comes direction. For a long setup, the plus DI line must be above the minus DI line, showing that buyers are the dominant force, and the closing price must be above the exponential moving average baseline, confirming the broader trend is up. For a short setup, the mirror applies. The minus DI must be above the plus DI, and price must be below the moving average. With the trend confirmed, the strategy waits for its timing signal, a cross of the RSI midline. Here's the thoughtful part. In an established uptrend, price will occasionally pull back, and when it does, RSI dips below the 50 midline. The strategy treats that dip as the pullback. It then waits for RSI to cross back up through 50, which signals that momentum is resuming in the direction of the trend. That upward cross, combined with the earlier filters, is what signals a long entry. For a short, RSI must first rise above 50 during a pullback within a downtrend, then cross back down through 50 to signal the entry. Once a position opens, risk is handled entirely by the average true range, or ATR, which measures recent volatility. The stop loss is placed a set number of ATRs away from entry, 2 ATRs by default. The take profit is set at the stop distance multiplied by the reward to risk value, which defaults to 1.8, meaning the target is nearly twice the distance of the risk. So on a long, the stop sits 2 ATRs below entry and the target sits well above it. The strategy also trails the stop using ATR. As each new bar closes in a winning direction, the stop is ratcheted along at a distance of 2.5 ATRs, but only ever in the favorable direction, locking in ground as the trend extends. Finally, only one position per magic number is allowed at a time, and a spread filter blocks entries when trading costs are unusually wide. Every rule is deliberate, and every rule is designed to keep the strategy trading with the trend, not against it. Let's look at the actual MQL5 code that runs inside MetaTrader 5. At the top, you can see the input parameters, the dials you can adjust before running the expert advisor. AdxPeriod and AdxThreshold control the strong trend filter, defaulting to 14 and 22. EmaPeriod sets the trend baseline at 50. RSI period and RSI midline define the momentum signal, defaulting to 14 and 50. Then ATR period, AtrMultSL, RewardRisk, and AtrMultSL govern risk, the stop-loss distance, the reward-to-risk target, and the trailing stop. Below the inputs are the two signal blocks. The long signal is a single combined condition. It requires strong trend to be true, meaning ADX is above the threshold. It requires plus DI to be greater than minus DI, so buyers lead. It requires the closing price to be above the EMA baseline. And finally, it checks that RSI was below the midline on the previous bar and has now reached or crossed above it. When all of those are true together, the code calls trade.buy. Just before that, it sets the stop-loss 2 ATRs below the entry price and the take profit at that same distance multiplied by the reward-to-risk value. The short signal, just underneath, is the exact mirror. It needs a strong trend, minus DI leading plus DI, price below the EMA, and RSI crossing from above the midline down through it. When that lines up, the code calls trade.sell, placing the stop-loss 2 ATRs above entry and the take profit the reward-to-risk distance below. Notice how symmetrical the two sides are. The same logic, simply reflected for uptrends and downtrends. Let's bring this to life on a chart. On screen, you can see a series of candles with a blue exponential moving average line running through them, and below the price, a panel showing the RSI with its 50 midline marked as a dashed line. We'll follow one long trade and then one short trade, exactly as the strategy would see them. We begin on the left with a market that is climbing. The first few candles push higher, each one closing above the blue moving average. And notice how the RSI in the lower panel is riding comfortably above the 50 line. This tells the strategy two things at once. Price is above its trend baseline, and momentum favors the buyers. Behind the scenes, the ADX reading is above its threshold of 22, and the plus DI is leading the minus DI, so the strong trend and direction filters are both satisfied. This is precisely the kind of environment the strategy is designed to work in. Now watch the next two candles. Price stalls and pulls back, dipping down toward the moving average. As it does, the RSI slides down and crosses below the 50 midline. This is the pullback the strategy is waiting for, a temporary pause inside a healthy uptrend. Importantly, the strategy does not buy here. Chasing a pause would mean guessing. So instead, it waits for actual proof that momentum is turning back up in the trend's favor. That proof arrives on the very next candle. Price turns higher again, and the RSI crosses back up through the 50 midline. With the trend filters still in agreement, this upward cross is the signal, and the buy entry marker appears on the chart. At that moment, the strategy places its stop-loss 2 ATRs below the entry, and its take profit at the stop distance multiplied by the reward-to-risk value of 1.8. So the target sits meaningfully further away than the risk. From there, price resumes its climb. The following candles push up strongly, and the take profit target is reached at the marked level above. As price advanced, the ATR trailing stop was also ratcheting upward behind it, following the move and protecting the position along the way. That completes the long side of the illustration. A strong trend, a pullback, a midline cross confirming the resumption, and a defined exit. Now the market shifts character. Near the top, price stalls and begins to roll over, and over the next couple of candles it falls back through the blue moving average. Price is now below its baseline. The minus DI takes the lead over the plus DI, and the RSI drops well under 50. The strong downtrend is established, and the strategy flips to watching for short setups instead. Just as before, it waits for a pullback. Price bounces upward for a single candle, and the RSI climbs back above the 50 midline, the counter-trend pause inside the downtrend. Then, on the following candle, price turns back down and the RSI crosses back below 50. With price under the moving average and the minus DI leading, This downward cross signals a short, and the sell entry marker appears. The stop loss is placed 2 ATRs above the entry, and the take profit sits below it, again at 1.8 times the risk distance. Price then continues lower, candle after candle, until it reaches the short take profit target at the marked level, with the ATR trailing stop following the move down. And there you have the full cycle, applied first to a long and then to a short. Wait for a strong trend, wait for the pullback, act only when the midline cross confirms momentum resuming, and let the defined stop and target manage the outcome. And that brings us to the end of our breakdown of the Directional Movement Pullback Expert Advisor. We covered how it uses the Directional Movement Index and ADX to confirm a strong trend, an exponential moving average to define direction, and an RSI midline cross to time entries as a pullback resumes. We also walk through its ATR-based stop loss, take profit, and trailing stop, and we read the core logic directly in the MQL5 code. Remember, everything here is for educational purposes only and is not financial advice, a recommendation, or a solicitation to trade. Trading carries real risk, and losses are a normal part of it. If you found this useful, please like the video, leave a comment with any strategy you'd like us to analyze next, and subscribe for more MT5 breakdowns. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.